Hey everyone, it's Konrad Bobilak here, CEO of Investors Prime Real Estate and best-selling international author of Australian Real Estate Investing Made Simple. Welcome to today's video. I'm in beautiful sunny Melbourne. I'm just kidding, it's pouring down and raining. Thank God I'm going away for a couple of weeks on the school holidays. Before I do, I thought I'll smash out a video and give you a bit of an update on what's happening in the Melbourne property market. I've been speaking to a lot of agents in the Bayside area and the eastern suburbs of Melbourne, and having a lot of meetings with accounting groups and financial planning companies, and just listening to different opinions about what's happening in the Melbourne property market. It's been very interesting. So I thought I would unpack this topic because there's a lot of negative sentiment out there, talking about how the market's flat, how auction clearance rates are average, 68%, how a lot of people are selling properties because they can't afford the land tax. A lot of investors are dumping or exiting the real estate market in Melbourne and going elsewhere because of land tax and exorbitant costs. It could be true to some extent, but what I've seen is there are two types of investors, guys. There's novice investors that don't know what they're doing, and there's seasoned investors with large property portfolios. So what I've noticed is the ones that are inexperienced, usually mum and dad investors with one property, they are selling because they're under the pump. And I don't blame them. There's a lot of stuff happening in the economy. Everything's going through the roof. The cost of fuel, insurance, electricity, gas. Labor has lied to us completely. They've completely failed in their ability to keep consumer costs down. And because of Labor, because their obsession with renewables, and going to, green energy, we're paying the price for it. But anyway, I don't want to get political on this channel. It's all about property investing. But, people are doing it tough. So the investors that have small property portfolios, maybe one property, and they bought a house that's very similar to them, they are selling up their properties because they're struggling with mortgages, and mortgages now are up to, variable rates of 6.5, people paying 7.5% for the owner-occupied properties, depending on who you've been through. So I don't blame them, but what's really happening is there's a two-tier market, and it's almost like a two-speed economy in Melbourne. And I want to unpack that in detail because there's a lot of misinformation out there. And remember, the media loves jumping onto the bandwagon of negative news because negative news sells. And this is what people are tuned to listen to. When it's positive news, no one cares. So welcome to today's video on how to get rich in the Melbourne 2024 flat real estate market. And I'm going to unpack if it is a flat real estate market. Is it in fact, or is it a market that's just having a breather before it takes off again? So welcome to today's video. I'm also going to do an update on the September video because there are a couple of interesting things that have emerged in the property market. So I'm definitely going to do an update for September with the latest data that just came out. Before I get started, bit of a disclaimer, everything today is purely educational purposes only. This is not financial advice. I've never met you. I don't know your financial standing or risk profile. Therefore, don't act on anything that I'm telling you today. I'm just sharing a bunch of ideas that have worked for me and my clients. And if you value anything that you've picked up today, then I've succeeded in my endeavors. This channel is purely designed to educate people on how to make money in real estate through buy and hold in Melbourne. And so I'm kind of sharing the essential information that you need to be aware of as an investor. And look, I'm a property investor myself. The most important thing about me is that I'm not an academic, even though I'm a published author. I'm not an academic. I'm not a theorist. I'm actually someone that's doing it themselves. I've got a multi-million-dollar property portfolio. So I'm in the market all day long. And I'm talking to investors. I'm talking to solicitors, accountants, financial planners, insurance brokers, everyone in the financial service sector, a lot of bankers, and obviously I'm in the game myself. So I want to kind of share with you what we talk about and what are the concerns, what are the opportunities, I guess, and what are the things you got to be aware of as an investor looking into the Melbourne property market right now. I've also got a YouTube channel, which obviously you're on right now. My background, as I mentioned before, is very traditional, real estate, mortgage broking, financial planning. But the most important thing is I'm a property investor myself, guys. I'm not a theorist. There's a lot of theorists out there with no money behind them that are writing articles about the property market, and it's just the biggest load of bullshit that I've ever read. And I've been reading this for the last 30 years. I'm 48. I've been in the financial service sector and I've been obsessed with real estate since I was 18, since I wasted 4 years at Monash University doing a business course. So I've been kind of looking into this game for a long time, reading the Fin Review, watching, specific information about the property market. So I just want to share with you some of the things that I think you should be aware of as an investor if you're going to make an educated decision about whether to buy, sell, or hold in the current market. Also, I want to thank you guys for supporting me and buying my books on Amazon and Booktopia and different bookshops. It's done really well. I've gone #1 multiple times. So I really want to thank you for doing that as well. If you want to get a copy of my book, which is Real Estate Investing, jump onto realestatemadesimple.com.au, where you get the book and an online video course for free, for effectively $40, whatever it sells for. And my book on finance as well, $30, teaches you how to reduce your mortgage. People are so stressed with their mortgages. There's so many different ways that I teach you in that book how to smash your mortgage in record time and save yourself decades of unnecessary interest repayments to the banks. Just one distinction in that book could save you tens of thousands of dollars. It's all practical information. It's not theory. It's not an American book or English book for the UK market. It's written for Australians by an Australian, and it's all up to date. So grab a copy, bookonfinance.com.au. And also, just as a special gift for being here today, if you scroll down below this video, you can access my online video course for $497 value, absolutely for free. It's a little bit dated now. It was a recording from a few years ago. 70% is still 100% current, and 30% is dated because the market's obviously moved on. So if you watch that online video course and you watch my up-to-date videos on YouTube, which are my market update videos, combine the two together, you'll be 100% up to date with what's happening in the property market. So from a macro level, big picture perspective, nothing's really changed in the real estate market in the last 10 years. From a micro level perspective, change is an ongoing phenomenon. Micro level change happens every day. Policies change, interest rates change, markets change. Even the seasons determine the volume of auctions and the volume of interest. So at a micro level, change is constant. At a macro level, the fundamentals haven't changed, guys. St. Albans is still the worst suburbs to invest in. Melbourne and Elwood and Port Melbourne are still the best ones. That hasn't changed in 10 years. So here's my personal track record of predicting the future of the Melbourne real estate market. Because the thing is, a lot of people have ideas, but a lot of the ideas are completely without substance. Okay. The biggest problem I have with the market now is there's a lot of these pop-up companies that claim to be independent research experts. And I met with one of these research companies recently. I won't mention names because I don't like mentioning specific names. I don't want to get sued and I don't want to make people upset. But this is one of the biggest research companies in Australia. They wanted to do a joint venture with me and my channel. And they have software that determines price prediction movements of suburbs in any major capital city. And the software is proprietary software. And it's and what I do is I don't believe in software. I do fundamental analysis. I subscribe to Warren Buffett, who happens to be the richest person in the world. I know it's a small detail, but I use Warren Buffett's methodology for choosing properties. So I do fundamental analysis, street level analysis, backed up by technical analysis, which is core logic. Now, anyway, this company, I was meeting with the owner. We had lunch in a beautiful restaurant in Malvern. And so I asked you, it kind of went sour pretty quickly because he asked me about my research, and I told him what I do. I do fundamental analysis, which is street level analysis, and I've done videos explaining what I do. I'm not going to go into it in detail in this video because it's not what this video is about. Anyway, he says, yeah, we have an algorithm that predicts future price movements. I said, can I ask you a question about the algorithm? Because I've studied stats at uni and I'm into that stuff. So what exactly is the algorithm? You're talking about a set of formulas. Yeah, it's a formula. And who created the formula? Oh, it was created by programmers and an actuary. And can I ask you, with the programmers and the actuary, are they multi-millionaire property investors themselves? Oh, no. They're hired. We've outsourced the programming overseas, and the main person is in Australia. Well, the main person in Australia that created the fundamentals behind this algorithm, are they successful property investors? No, I don't believe they have any properties behind them. So they're just a nerd, basically. So effectively what you have is you've got a formula which is designed by a broke nerd predicting movements in the property market. And they said, Well, you could put it that way. Well, I don't want to put it anyway. You're the one that's putting it. So you're saying a broke person who's got a mathematical doctorate is creating a formula and they claim to have cracked the secret of price predictions. That's what you're telling me, yeah? Remember, Warren Buffett says, beware with geeks bearing formulas. You can't have a broke person, I don't care how smart they are, predicting movements in any market, whether it's stock market, real estate market, bonds market, annuities market, with any level of certainty if they're broke themselves or never invested. And this is the problem. They sell this concept to the public. And by the way, this is called a black box system, which is in the stock market. And I've seen in the last 30 years, hundreds of, literally, not even exaggerating, not dozens, hundreds of black box systems that are going to make you millions. You just set it up and you press a button and you win. Now, if that really worked, do you think Macquarie wouldn't spend $100 million into one of these things, or the biggest banks in the world like BlackRock? Wouldn't you think BlackRock would just put, I don't know, $1 billion into a black box system and algorithm? Why is it that these guys are always out there and no one knows about them, but they want to make you rich because they're so good? But the biggest financial institutions in the world who have billions of dollars never ever tap into their black box system or algorithms. I don't know, maybe because it's bullshit and it doesn't work, and it's just a get rich quick scheme for people that are unwary and uneducated. That's my opinion. So anyway, I politely told the company I'm not interested in having any association with any company that has an algorithm, which is a program or a formula designed by broke nerds on predicting what the property market's going to do. I'll stick to my fundamental analysis, which took me 30 years to acquire. So anyway, there's my bit of a rant, but this is the reality of the market. Now, because I'm on YouTube, and you can tell on YouTube, I started off really thin, full set of hair, and I'm getting fatter and fatter and bolder. So I can't change this, right? So it's a timestamp, right, on YouTube. I'm going to be like 90 eventually with a walking frame going, I told you to buy some killer for $1 million. It's $10 million now. Anyway, this is 2019 and 20. You can watch this video. I did a video predicting the best suburbs to invest in Melbourne. Albert Park, Port Melbourne, St Kilda, East, West, Balaclava, Brighton, Bentley East, Elwood Hampton, Sandringham, Blackrock, Balmoral, right? Now remember, Melbourne has 321 suburbs that are established, and there's 197 house on land estates, right? Right up to Wallen, Woolert, and beyond Pakenham and Berwick and beyond Truganina and Tarneit. So there's about, there's 500 plus suburbs, it's a huge area, Melbourne. So we can't invest in Melbourne. There's no such thing as a Melbourne index. You've got to be able to discern based on fundamentals without any emotion on which areas to park your money. Because remember, as an investor, you've got limited access to funding. Every one of us has limited resources. And the thing about this game is the people that win is the ones that make the most money. That's all it is. Because the more money you make, the more you can spend it on your life, your family, not working as much as you're working, give it away to charity, whatever you're into. So 2019. Now, these are the results. This is actually from December quarter 21. So remember, 2019 and 20, this is what I predicted. So 2019 was a prediction. This is 1 year later in the December quarter 21. These are the results. BlackRock, 30% growth. Mentone, 29%, Frankston South, 29%, Mordialloc, 25%, Albert Park, 24%, Carrum, 19.8%, Parkdale, 19.7%, Balmoral, 19.2%, Frankston, 18.8%, Seaford, 18.5%, St Kilda, 16.9%, Sandringham, 16.5%, Aspendale, 15.1%. That was my results. So this is my prediction, right? You can see that Albert Park's number 1, BlackRock's number 9. And this is the actual results. Then, when we came down to 0.1% in interest rates, and if you've been following me on YouTube, I was telling people that the banks will never go to zero because we have to always make money in Australia because they'll be in breach of their duties as directors of running banks. You've got to be in profit. We're not a charity, and the banks are independent. The banks' core business is to sell money and make a profit and pay dividends to shareholders, right? That's how the biggest bonus checks are written internally. when interest rates went down to 0.1%, which is the lowest point we've had in history, and this is a few years ago now. We're talking August 2020. I was telling everyone at my 2-day event, right? This is from September 2020 to March 21. Stephen McClutchy and myself were running these, saying, guys, listen to us, okay? We've been around for a while, okay? We've got silver hair. The bank swap rate 0.1%. This is the lowest point that the interest rates can get to in Australia. They can't go to zero. Fix everything for 5 to 10 years. And I'm not sure if you know, you can get 5-year fixed rates quite easily, but you can get a wholesale fixed rate from banks and financial institutions for up to 10 years in Australia. 15 is the longest. So 10, you got to ring up and get a quote. So if you ring up NAB, they only advertise up to 5 years. But if you ring up NAB Private Banking, you can actually get a quote for 10-year fixed rates. And people were fixing rates at 3%, 3.5%, 4% for 10 years, 15 years, depending on the status of the client. Now, if you just learned that one distinction by going to my event in March 2020, and you had a mortgage fixed for 10 years at 3.5%, 4%, what difference would that make to your monthly lifestyle right now? Just think about how much you're paying, calculate what would you pay at 4%, and what is the difference per month. And what if you have multiple properties? And I was telling all my mentoring clients, guys, fix your rates. This is the lowest point. I guarantee it. You can sue me. I mean, it's on YouTube. I was making a joke of it. Okay, it can't go to zero, in my opinion. It's going to stay at 0.1 and only go up. So you want to fix as much as possible. And people were fixing, and they killed it. I'm getting champagne bottles sent to me, hampers, gifts. You can always send me gifts. I love gifts, anything, even money in a brown paper bag. Just send it to my office. Actually, don't send me cash. But yeah, I'm just kidding about the gifts, by the way. No, I'm getting gifts, but don't send me gifts. You don't need to. So I was telling people to fix rates, and they killed it. Then, and it was a fact now. And now, forget about it. Now the variable rates are 6.39 to 6.5. You know, people are doing lending at 7%. It's too late. So just coming to an event like this for 2 days. Now, the crazy thing is this. I just can't get over this part. People say, you know what, I'm too busy to go to your 2-day event. I've got to get babysitting. I'm working. I know you're working, and I know you're struggling. But how much money would you have saved if you pay off your mortgage in 10 years' time, or shaved 3% of your interest bill for the last 2 years? Like, how much? It's tens of thousands of dollars after tax. So remember, the reason people stay poor is because they're too busy working, trading time for money to learn how to become rich. The richest people, like Warren Buffett, reads an hour every day, even at Warren Buffett levels. He's a multi-billionaire. You would think he's stopped learning a long time ago. No, he's always learning new information and seeing how he can implement it and how he can improve his conditions. So remember, formal education makes you a living. Personal development makes you a fortune. And this is just one of the many examples where people have capitalized on knowledge from myself and Stephen McClutchy and Cameron Fisher, who've been around for a long time now in the industry, and they've implemented 1 or 2 distinctions and made a huge difference in their life. So then in 2023, I predicted key Melbourne blue chip suburbs. There's a perfect storm developed in Melbourne property market in 23. I mean, you can watch this video. It's online. I can't change the date that it was published on YouTube, right? I'm not a Russian hacker. And I was telling people we invest in the following suburbs. And this is the results from the suburbs. Fitzroy, 16.4. So this is from December quarter. This was actually in 23. And this is actually what happened in terms of performance. 12 months later, effectively, 16.4 Burwood, 11.9 Maribyrnong, 11.9 Chadston, 11 Mont Albert North, 10.7, South Yarra, 9.1, Lower Plenty, 8.3, Balwyn, 7.8, Vermont South, 7.7, and Keilor, 7.3. Even Keilor East did really well, you know, all those places. And so remember, Melbourne is a huge fragmented market. And what we're doing as investors is, whenever people ask me what's Melbourne doing, there is no Melbourne, guys. There's St. Albans and Toorak. And there's a house in Toorak right now listed for $70 million. Okay, 70, not 7 million, 70 million. and there is a house in St Albans for 800,000. There's no correlation between St Albans and Creagh, even though they're both in Melbourne. There's no such thing as the Melbourne market, guys. Okay, never has been, never will be, and it's just a fragmented market, and you've got to choose where you're going to park your money. Yes, we can mathematically merge all the suburbs into one cluster and derive things like median price movements, auction clearance rates, but all this stuff is what I call nonsense statistics. It's not actually applicable in any way. You got to go deep down, niche into the market, select a couple of suburbs and become an expert on those suburbs. People that make it in real estate investing choose 3 to 5 suburbs. They master those suburbs and they know everything about those suburbs because there's inefficiency in the market. Okay, and this is how you make money, not by reading articles saying Melbourne's going down, Melbourne's going up. Sometimes when Melbourne's going up, it's not going up at all. And sometimes when it's going down, it's the opposite. These are the top owners in Victoria. You can see that Creagh went up by 237,000. This is the latest data from September. Canterbury, 160,000. Bowen, South Yarra, just goes on and on. Park Orchards, 100,000. So even buying in these areas, I mean, who wouldn't want to have 100 grand in equity or 200,000 in equity? So remember, I'm just showing this as an example because the key thing is you got to stick to quality, not quantity when it comes to the market. But at the moment, there's a lot of media articles about the Melbourne market being flat, it's struggling. And yeah, the word on the street is people are negative. I must admit, even in my circle, and I have 2 types of friends in my circle. I have extreme millionaires that are not really my friends. They're just people that I work with. Most of them are developers. They have massive development companies. They do 60, 100 builds per year. They live in Creagh, Bowen, Brighton in big mansions, and they drive whatever car they choose that day. And it's either a Bentley or Ferrari. They're pretty much unaffected, but they are stressed about their business because escalating costs of construction. They can't get good tradies. The tradies that are coming from overseas are not really qualified to the Australian standards. So they're getting substandard tradies coming from overseas. Like if you're a tradie in Pakistan, you're probably not the same level as we have in Australia. I mean, just look at the houses. If you're from Pakistan, don't send me emails. I don't care. I'm just saying, look at the houses you're building and look at the house we're building. Okay, there's a slight variation. Okay, so what I'm saying is there's different levels of training, and what the government isn't doing is focusing on extremely skilled trades from overseas, which they should be doing. We're filling the kind of the white collar profession. We're filling doctors and biochemistry and IT, which is cool because computers, you can be anywhere, right? You can be in Pakistan, you've got a latest computer, you have the same skill set as a programmer in Silicon Valley, right? There's no difference. But in terms of building houses, there is a difference. And you know yourself there's a difference. There's a difference in Poland, where I'm from. There's a difference in Croatia, in Pakistan, in India, in Africa, in Mexico. There's different standards everywhere. And you got to have people, it takes a long time to be trained in Australia to build a house correctly. And unfortunately, because of COVID-19, we've lost a lot of those trades. So people are struggling. So those millionaires are struggling because they're stressed about the business. A lot of the kind of average middle-class earners that I have that are my friends, they're really struggling about just paying bills because their mortgage repayments have gone through the roof. I mean, I was talking to a couple just over the last break we had. We had a barbecue, and this couple, they're on $250 each, and they're struggling with their mortgages because their mortgages for the houses, they've got a holiday house in Sorrento, and that repayment went from $5,500 to $12,000 per month, and their PPR went from $8,000 to $19,000, and that's after tax money, and then they got 3 girls in private colleges, brand new cars, and then there's no money left over. So why is Melbourne struggling? Why are these articles written? What does it really mean? Remember, I take a long-term view when it comes to property investing. Just like Warren Buffett, when I'm buying a property, I'm buying with the intention of never selling it, holding it for the next 30, 40, 50 years, leaving it to my daughter. Melbourne has been Australia's strongest performing housing market over the last 4 decades. However, the last couple of years, it has underperformed. True. In fact, in the last 12 months, dwelling prices have basically stagnated, while many other capital cities enjoy double-digit growth. Now, remember, I have always been able to pick the best-performing suburbs within Melbourne because Melbourne it's a huge market. Like I mentioned to you before, 321 suburbs that are established and 197 house and land estates. What they're talking about in the article is actually median price movements. And it's true, mathematically, median price have been negative 0.1% negative last week. So yeah, the median price is down, absolutely. So why would this happen considering the strong population growth due to immigration to Melbourne? And it's true, migrants have come into Melbourne en masse. We've just hit 27.1 million in Australia. We've had 600,000 come to Melbourne, which has been huge over the last couple of years. There's like 1 million that have come into Australia. The thing is with migrants, remember, if they come to Melbourne, and I think the last quarter there was 100,000, they can't get mortgages. So what they do is they rent, and this is why we have such a critical problem with the rental market in Australia, because Labor has allowed hundreds of thousands of migrants to enter the country without a housing solution or rental solution. Like, you would think about this: if you're having a barbecue for 20 people, right? Like, just think about it this. Okay. You're having a barbecue for 20 people. Do you prepare? Like, would you, like, I don't know, like if they're coming on Saturday, you would, like, on Friday at least go, maybe we should get some meat and like prepare food and drinks and alcohol, maybe set up the area, clean the backyard, put the tables and chairs in strategic places so that people can sit around, maybe do a bit of music thing. If you got a pool, clean the pool. Like, you would prepare, right? You wouldn't just like wake up on Saturday and 11:50 go, oh shit, there's 20 people coming to our house. What are we going to do? How are we going to feed them? Well, that's exactly what Labor has done in the last 2 years, right? They've just let all these people in to avoid a technical recession, and then we got a per capita recession without any planning, without any forward thinking. Now, remember, I'm a migrant myself. We migrated from Poland in '85. I'm pro-migration and immigration, okay? But I'm just saying, you have to have three things happen. You've got to forward plan before they get here to make sure they can live somewhere. So rental market or buying properties. Also, you got to have the right infrastructure. If you're going to build 500,000 houses to accommodate new people, you got to make sure the roads, transport, hospitality, hospitals, schools, childcare facilities are also there. So you got to prepare. It's got to be sustainable as well, and you've got to have enough jobs for them to do. You can't just open the floodgates and then expect everything to work out, which is exactly what's happened. So the underperformance of Melbourne residential property market can be attributed to several factors. Now, remember, with migrants coming in, they can't buy a property in its first 12 months. They can only rent. They need to do 12 months tax returns, pass the probationary period in their job before they can get a mortgage and set up a credit file. So some of them take up to 2 years to become market ready. And then the ones that can bring money from overseas, they can buy houses. The ones that can't bring money from overseas and haven't got permanent residence, they take up to 3 to 5 years to buy a house. So there's a delayed effect between people coming into the country versus when they can actually go into the property market. What happens immediately, though, is they go into the rental market, and there's been nothing on the rental market. This is why Australian families are struggling, and they're priced out of the rental market, and they're living in tents. I mean, you've seen the stories in current affairs. Legitimate people, I'm not talking about drug addicts, I'm talking about people that are working full-time. Mum and dad can't afford to rent in Queensland, and literally they are staying in caravan parks and tents because they can't enter the rental market. It is insanity, and it's completely the government's fault due to lack of planning. Economic headwinds. Victoria has experienced significant economic setbacks, particularly evident in the net reduction of 7,606 businesses during the financial year 2022-23, according to the Australian Bureau of Statistics. In stark contrast, Queensland saw the greatest net increase in businesses, expanding by 11,031 in the same period. During the COVID lockdowns, we've had thousands of businesses fail. Cafes, restaurants, gyms, anything that relies on functions. So wedding, reception centers, photography places, all those places devastated, shut down. We've seen pubs shut down. We've seen, cafes have been around for 30 years shutting down for the first time. And a lot of those businesses, when they shut down, you got to understand, they're not like you shut down and go, oh, well, let's set up a new cafe Monday. Today's Friday. No, what happens is when you go down in the business, you go down hard. A lot of them lose their marriage, they lose their house, they never recover, and they never go back. And the same thing we saw with trades leaving Victoria because they couldn't work, and they went to Queensland. Impact of lockdowns has been monumental, and we're still paying the price in the Melbourne property market. One of the main reasons for the decline in business numbers in Victoria is the aftermath of the state's extensive lockdowns. The lockdowns were 260 days. Thank you to Dictator Dan, were the strictest in the nations and severely impacted small businesses, particularly cafes, restaurants, and retail shops. Many of these businesses could not recover, were forced to close permanently. Just go down the walk via vibrant Chapel Street to see the fallout. I mean, even in Chapel Street, there are shops that are closed. If you go to like Harbour Town in Docklands, I don't even know what it's called now, 60% of shops are empty. I mean, it's just retail's dead as disco. It's crazy. So that has created a massive void in businesses, and those people now have working in other sectors. Tax burden, another critical factor is increased tax burden on businesses. The Victorian government introduced payroll tax surcharge in 2021-22 state budget as part of the mental health and wellbeing levy, targeting businesses with payroll over $10 million or more. They're evil, of course, because they're making money. So let's punish them. Yeah, that's smart. Great. That's what the communists did in Poland. Just see how that worked out. This this was followed by further increased payroll taxes in 22-23. State budget as part of the 10-year COVID debt recovery plan to repay the government's substantial borrowing during the pandemic. So they forced us into lockdowns. They forced us not to work. Now they're punishing us with money to pay back the debt they incurred from forcing us not to work. It's like a black comedy. It's like a movie, These tax measures have made it increasingly difficult for larger business to operate profitably in Victoria, prompting many to consider relocating their business-friendly states like Queensland. And they left. A lot of companies shut down, and they have left or they've relocated their head office into Queensland. Economic fortunes and property market performance. The economic struggle of Victoria has had a direct impact on the property market, where the economy has jobs and property market follows. Of course, people with jobs have money, they can acquire properties. If you have an exodus out of Victoria of businesses, especially those middle businesses, and relocation of trades, and a lot of even like landscaping companies, anything to do with linked with the building industry, they've gone to Queensland. And there's a void that's been left in Melbourne. I think that void will take a long time to fill. I'm talking about decades. It can even be up to 2 decades before we have the same level of trade skills, plumbers, electricians, tilers, cabinet makers, that we anyone that has anything to do with building a house that we've lost, that we've had before COVID. The poor performance of Melbourne's property market reflects the state broader economic challenges all at the same time. Property investors are getting disillusioned with Melbourne. Property investors, these are the articles, you see many of these written, and they're legitimate. They are based on some level of truth. But what is a property investor? Within property investors, there are skilled property investors and there's speculators. Are increasingly abandoning Melbourne property market driven by stricter residential tenancy legislation and higher land taxes. Well, stricter tenancy legislation about making your property safer only is relevant to all the properties. That's why I only source brand new properties, because you can pass all those requirements without any improvements made to the property. And also, the higher the rental yield, the minimum standard that you have to have in the property goes up. So these are people that are buying really cheap properties, old houses in good suburbs with big blocks of land, but the houses from the 50s and 60s, and they can't afford to spend 30, 40, 50, 100 grand doing them up to, a good energy rating, or just getting air conditioning in every room, etc., mold, all this other stuff, because they shouldn't have bought them in the first place. They bought them without any thinking or education. Now they're selling it because they can't afford to hold on to it. Well, yeah, I mean, what else would you do? But if you bought the right property for the right reasons, you wouldn't have to sell, and if you had a right strategy. So remember, it's not that the market has failed them, they failed as investors. That's all it is. Recent reforms in tenancy laws have tipped the balance heavily into favor of tenants. Well, the left wing is always going to do that. That's just something that was coming. The more you have a group of people doing something in common, which is a massive amount of group people renting, you're going to have more and more rules being drafted and legislated in their favor, because they represent a larger portion of society. Therefore, they vote. Therefore, they vote the right people in. They'll look after their needs, which is kind of what democracy is based on and what the government should be doing anyway. Making it more challenging for landlords to manage their property effectively. Well, most of the smartest landlords that I know, any dollar they spend on the property, they increase that by $1 in the rental market and what they charge a tenant for the year. So you're spending $1,000 for the year, you increase your rental by $1,000 for the year. That's just that simple. You pass on your expenses into the tenancy, and if the tenant market can't absorb that, then you're in the wrong market. That's the reality. These changes include mandatory minimum standards for rental properties and stricter eviction rules. So yes, there's always been an element of, especially with evictions, a small percentage of landlords have abused their power. But for most landlords, you've got to understand, if your tenant is good and they're paying rent on time, why would you ever evict them for no reason? It just doesn't happen. Most of the time, they've done something wrong. They either don't pay on time or they're not looking after the property to the level they should be. And there's a legitimate reason for evicting them. Like, why would you evict a tenant? I've never met anyone that says, Konrad, I've got a fantastic tenant. They're clean. They always pay on time. I think I'm going to get rid of them. So I'm going to start the process of eviction. Like, when does that happen? So tenants getting evicted are usually the ones that deserve to be evicted, and they go and cry about it, you know? It is what it is. I've never met any landlord that would evict someone for no reason, unless they want to sell the property or move into the property, and they have the right to do so because it's their freaking property, right? Like, it's their capital. Okay, we're not in communist countries here. We're not in the business of providing social housing. We're here to make money, and we have ownership over assets. While these regulations aim to protect tenants, they also have increased the administrative burden for cost of landlords, true, making property investment less attractive. Not really, depending on the property. In fact, many investors feel control is being taken away from them by the government interference. Yes, but I have seen legislation, and I'm going to do a video about it with Cameron Fisher. We talk about it openly in my events. I think all the changes are excellent. They haven't impacted anything that I'm doing. All my properties have passed. I think tenants should have those rules. It makes them stay longer in the property. Additionally, Victorian government decision to hike land taxes has further compounded the woes of property investors. It's true. If you buy the wrong property, it's got a huge land component and the building is depreciated, then yeah, that definitely will impact your cash flow. I mean, and look, I've done a video on land tax a couple of YouTube videos ago. So if you watch that video, it goes into this topic and unpacks it in extreme detail. Because if you're buying the right property, this should have no impact on you. If you're buying the wrong property, this will have a devastating impact on you. So remember, the biggest risk with investing is you. You're the risk. I don't believe in market risk at all. Market risk is insignificant. You're the risk. Your level of knowledge and your level of awareness will determine your outcome. And the most successful investors take responsibility for their outcomes. They don't blame their parents, their grandparents, the government. You know, they're not life victims. They always say, I'm responsible. I've lost money. How can I learn from this experience? What did I do wrong? And what am I going to do in the future to make sure it doesn't happen again? People that are professional life victims that just blame everyone, well, they never achieve anything. They just blame everyone for the rest of their lives. And I know those people. Avoid them like a PD party, Puff Daddy party. Let's not forget Victoria's absentee owner surcharge, stamp duty surcharge of vacant residential land taxes. Yeah, combined with stricter impact of tenancy laws, absolutely. Despite skyrocketing rents in Melbourne, many of them are seeking more favorable investments in other states where regulatory and tax landscape are perceived to be more investor friendly. You know what? Land tax has never been an issue. In fact, the townhouses that I've been sourcing for my clients in the Bayside and the eastern suburbs and the western suburbs, like Moonee Ponds, Essendon, you know, they've gone up by 20 to 30% in the last 2 years, far beyond any cost that the client has actually been forced to pay on the property. So they've absorbed all the costs, and most of these properties are cash flow neutral or positive. A silver lining, the window of opportunity. Despite the current struggles, there is significant opportunity in Melbourne's property market. Property prices are considerably lower, below replacement costs, creating a unique buying opportunity. When property costs for established properties are below replacement costs, you know the market's about to go up and boom. It's a unique buying opportunity. This situation is similar to the one in Brisbane and Perth 3 years ago. Back then, both cities were experiencing a period of underperformance, but those who bought during the right time have seen significant capital growth in the market recovery. Many experts believe that Melbourne's housing market could dominate other capital cities over the next 5 years. AMP chief economist Shane Oliver suggests that Melbourne's lengthy period of underperformance has primed the city for a robust rebound. Completely agree, 100%. Melbourne's going to boom, and when it does, people are going to be shocked to what the median price will be. We're going to go to 1.2, 1.3 million. There is no chance that Melbourne is cheaper than Adelaide and 5 other states. Melbourne will always be behind Sydney, and eventually it's going to overtake Sydney by the median price. Mark my words, guys. You're watching this YouTube video in September 2024. Remember, Konrad has said this. Improved affordability and rising rental yields are likely to attract investors and home buyers back into the market. It may take several rate cuts to fire up Melbourne's house prices. That's absolutely true. I think there'll be a rate cut in February next year when the RBA meets. No chance this year because inflation is still an issue. But when the rate cuts start and the market is looking good again and rentals are going to go up even further, making everything cash flow positive and neutral, investors will go back in the market. And then we're going to be primed for the next market cycle boom. And then it's going to be game over if you bought at the right time. If you're buying when it's booming, well, you're just paying a premium for the same property. Remember, whatever townhouse you buy this year is going to be $100,000 more expensive next year for the same price, based on inflation and cost of materials going up. So you want to buy at the bottom when everyone's negative. It could come back with greater strength, and less likely what we're likely to see in Brisbane, Adelaide, quite possibly Perth, depending on what happens in the commodity prices. Oliver said. So where are we in the property cycle right now? Remember, the market is cyclical. It's about 8 to 10 years around the market, roughly. But Melbourne has 8 distinctive markets now doing their own thing. If you want to learn about them, watch my online video course. But roughly, we have the peak of the market at the top, the decline at 3 o'clock, the bottom of the market at 6. 9 o'clock, we have the growth of the property market, and we have the peak of the market. The growth phase is where majority of the growth happens every 10 years. And remember, it's a huge market. In September, the real estate market is $11 trillion, $2.3 trillion in mortgages. So there's a huge amount of equity in the market, right? There's like 80% equity in the market. 56% of our wealth in Australia is locked in housing. It's not going anywhere. It's never going to crash, but there's going to be short-term volatility, absolutely guaranteed. And are people going to be wiped out in real estate market? Guys, listen, people are going to be wiped out in businesses and real estate investing and the stock market and cryptocurrency trading from now to the end of time. People are always going to be losing money on everything they do, but there's a percentage that make it. And what you got to do is find the percentage that makes it and copy them, literally. Just see what they're doing and replicate it. Learn from successful people, not whingers or people that have lost money. Australian dwelling values, 3 months, 1.3%, 7.1 for 12 months, and then 2.3 per quarter. You can see that 3 months changes. See, as a whole, combined capitals and regionals, we're still doing good as a country. Melbourne's negative 1.2% for the quarter. So Melbourne is behind everyone, and it's going to take off. I mean, this is the time to buy Melbourne. Well, the best one was 2 years ago. We're going to see an upsurge in the capital cities, but Melbourne's going to take off. Remember, the thing about Melbourne, guys, is if you look at this chart especially, you've got different percentiles in the property market. You got the 25th percentile, 50th percentile, 75th percentile. So if you let's say you have a market where there's $0 to $1 million, $1 million is the highest property. You've got the bottom market, which is the cheapest houses. You've got the middle market, right, which is the 50%, and then you got the top end. Every cycle, every beginning of every cycle always gets kicked off by the top end going up. Then the middle gets dragged up, and then eventually, 2 or 3 years later, the bottom comes up because the gap between the bottom and the middle becomes so wide. It's just unbelievable opportunities. And we're at the moment, we're still negative in Melbourne. So the top end has come off 1.8%, and there's a lot of properties on the market at the moment. In fact, the listings now in Melbourne are 40% higher than 10 years ago. In fact, we had some of the highest volume of listings ever because people are selling, because they're stressed. They can't afford mortgage repayments, they can't afford land tax, and they're dumping properties and downsizing or going into the rental market. So definitely, yes, Melbourne is still going negative, and it could go down even further. There's no guarantees that Melbourne's going to go up next year. It could be at the end of next year. But remember, Melbourne is a common market. Within Melbourne, there's going to be suburbs that are going to be doing double-digit growth during the same period of time. So, as I showed you before, there are suburbs. I know which ones they are. If you come to my event, I'll share them with you, that are going to be doing at least 10% in the next 2 years. So every low in the market, this is from 1990, has been followed by a recovery in the high. And remember, when your property devalues, if you buy something for $1 million, it goes down to 900 on paper, it's just a paper loss. You haven't lost 100,000. No one's going to ring you up from the bank and say, "Can we have $100,000 back? Can we redraw your equity?" Or there's no margin call, there's no equity withdrawal. It's a paper loss. So you just got to learn to buy and hold long term over a 10-year period. You're always buying properties with the intention of never selling in 10 years. If you sell your property in the next 10 years after you buy it, chances are you could, less than 10 years, like 5 years or 3 years, with agents' commissions. And if it's just the wrong timing, you could lose money on the best properties in Melbourne, guaranteed. But you got to look at probably minimum 10 years, or when the cycle goes and does this whole growth again. So it goes from 12 back to 12. Then you can look at property. Property is not the stock market, guys. It's a long-term, 10, 15-year proposition. And definitely, yeah, with the bottom, somewhere with the bottom of the interest rate cycle, the interest rates are definitely, because 80% of people have variable rates in Australia, when interest rates go down, the market has an immediate impact on the housing market. And look what's happening in America already. The Federal Reserve has just cut interest rates by 50 basis points. Now, remember, in America, it doesn't have the same impact because most people have fixed long-term mortgages. In Australia, it's the opposite. Most of our homeowners and property investors, around 70, 80%, have a variable rate. And behind every economic challenge, I don't know if it's a recession, depression, economic event that was perceived to be negative, the market booms afterwards, because the money has to go somewhere, and you either have the stock market, the property market, and then to some extent you've got the crypto market. So yeah, the best time is always to buy at the lowest point in the market, and where we are at the moment, it's the lowest point in the market. This is the time to buy, but once again, you've got to get the right level of knowledge. You got to be discerning. You got to know exactly which property to buy. Warren Buffett, guys, I tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. Smartest man in the world when it comes to investing. Most successful, without question. So if you're going to listen to one person about anything, this is the guy to listen to and just replicate and do exactly what he does. So where are we in the property cycle? So you've got the peak of the market and the bottom, and you have different levels of, you have the reactional low and emotional high, and you have people panicking and selling at the wrong time. Melbourne is here. This is from Herron Todd White Valuers. We're about to go into the boom phase. Now, this is from the Herron Todd White Review, residential, August 24. I haven't updated this because September and August for Melbourne is identical. So I've left the August one there. But Melbourne is here, guys, peak being 12 o'clock on the property clock. So we have massive growth coming up. Like, this is the best time to buy properties between 6 and 9, and then you want to hold everything from 9 to 12 and lock in your valuations. You never want to buy from 12 to 3 or 3 to 6, because that's when the market goes down. And you could lose 10%, you can even lose 15%. I don't know, if you're unlucky and you get the wrong valuation, you can lose 20%. But then if you hold through those periods of time, you make money. But from a timing perspective, the best time to buy is from 6 to 9 o'clock, and this is where Melbourne is right now. So this is where, this is the investment clock. So you can see there, we're at the peak. You don't buy from 9 to 12. You just refinance everything, increase your lines of credit, and use that line of credit to trade shares, buy crypto, buy other properties. You refinance and lock in everything at the peak. You do nothing from 1 o'clock to 6 o'clock. You just hold. Okay. If you want to buy something and make offers and get discounts, or the right property comes on the market, yeah, that's when you buy. At the bottom of the market, which is 6 o'clock, 5, 6, 7, that's when you want to make offers and buy, as long as you stick to the fundamentals. So you want to buy good quality assets at a discount. And then when you hold those assets, then they go up in value, and the biggest growth you're going to get is from 9 to 12. So this is the if there is a secret to making money, this is it. Now, I always say it's timing the market, not timing of the market, because we could have a small recovery. We could have another war overseas or something happening where it changes the game, and we have a delayed effect in the property cycle. That's why it's almost like gambling at the same time, which is fundamentally what I always say is don't worry about the property cycles at all. Buy whenever you can buy and stick to the fundamentals, and even overpay sometimes, because as Warren Buffett says, I'd rather overpay for a wonderful company than underpay for a bad one. And he's talking about buying shares in companies. In property investing, it's the same thing, because if you're holding it for 12, 15 years, even if you have negative equity for 1 year or two, the next growth will make up for what you've lost on paper. But yeah, if you want to time the market, this is the time to buy. We're at the bottom of the cycle, definitely. You'll only be paying a premium at the top. So the best time to buy is from 6 to 9 o'clock. This is exactly where we are right now. So that's from a timing perspective. From a fundamental perspective, it's always a good time to buy. It's like saying, when's the best time to go to the gym? Today. Tomorrow's the second best time. So that's where I can see Melbourne there. Best time to buy properties right now in Melbourne. Yes, everyone's negative, and yes, it's expensive, and that's why you need buffers. And yes, people are selling properties, are losing money, and people are dumping old houses on big blocks because they can't afford land tax. But I've got clients buying the 8th, 19th property because they purchased the right property with the right tenants, the right rental, and they have massive buffers in place to pay for their life and for holding costs associated with the property. And when they go back to 12, they'll be laughing all the way to the bank. And yes, some years you'll lose money on property on paper, and in terms of cash flow, you have to top up the property just to get through that period of time. Absolutely, it happens. I've done it myself many times. So 7 trends that are shaping the Australian property market right now. Population change is off the charts, guys. This is the biggest thing. The government has brought so many people in because they want to avoid a recession, and they kind of got away with it. Overseas migration is record high. It's unsustainable. As a result, it's put massive pressure on the rental market. People can't get rents anywhere. Vacancy rates are below 1%. They should be 4.5. People are screaming. Every townhouse that my clients put on the market, they're getting 60, 70 people turning up. It's ridiculous. It looks like a nightclub. It just looks completely just unsustainable. As a result, landlords have been increasing rentals, which have been absorbed in the market. So if you bought at the right time, and if you had massive rental increases, properties are cash flow positive, which is good. Population growth is fueling property prices without question. And we haven't got the industry or the capability to build the volume of houses that is required just for the people that are already in the country. We are completely at abnormal levels of immigration. I personally think we should cut it back by 70%. We should always have it in place, because Australia is a country made up of immigrants, and I don't care what country you're from, as long as you can come in, work, pay taxes, contribute to society, you're welcome to come to Australia. But guys, let's not stuff it up for the ones already here, because, the other day there was a story in the news. You can't even call an ambulance anymore. A guy died. He would call the ambulance at 2 o'clock in the morning. They came at 6, 4 hours later, he was dead. So we're going to be paying for it with police, ambulance, hospitals, childcare. There's going to be too many people. We need to have the infrastructure built before they come. Just like when you have a barbecue, you buy the meat, you put the chairs in place before you invite people over. Not invite people over, and then 5 minutes before they come, go, oh crap, we've got 20 people coming for a barbecue, and we've got nothing to feed them and nowhere to house them. So definitely rents have gone up. Now they've stabilized. I mean, you can't just keep going up and up. I mean, they went up by 30%, which is incredible. You can see there was a drop in rents during the pandemic because you couldn't go and review properties, and then they went up through the roof up to 30%. Now they've come off and they've stabilized because they're unsustainably high. Houses have been asking more rents than units, which are apartments. Apartments are a bit of a disaster in Melbourne. Don't touch them. Inflation now is under control. It's slowly coming off. That's why there's a good chance of having interest rate cuts in the new year, which is fantastic. Top performing suburbs in Melbourne: Toorak, Canterbury, Baldwin, South Yarra, Surrey Hills, Mont Albert, Williskill, Baldwin North, Middle Park, Park Orchards. Now, you can't afford to buy a house in these for an investment, but you can definitely buy a townhouse. If you're interested, come and see me. I source in these property areas and these suburbs all day long. Remember, by 2043, the median price in Sydney will be 6.3 million, in Melbourne 5.8 million. 5.8 million from 800,000 now. What are you going to do about it, guys? Because it's going to go up, just like Bitcoin. Do you remember Bitcoin was selling for $1,000 and now it's 70,000? Wouldn't you wish you could go back and buy 10 Bitcoins and just be worth like 700,000 today? Property is going to be the same. And remember, it's going to happen with or without you. Just like Bitcoin, Melbourne is undervalued. When Bitcoin was 1,000, now it's 70,000, and now with the halving, it's going to go to $500,000. And then people are going to go, "Oh shit, I missed the boat." Some will, some won't. If you learn the rules of the game, which is what this channel is all about, if you educate yourself and have the right team behind you, and have the ability to make discerning decisions about where to park your money, you're going to win. So remember, we have an impending property boom in Australia. The average cost of home will be 6.3 million in just 20 years. Melbourne will be the biggest one. What are you going to do about it? So many of you will do nothing. Just stick your head in the sand and hope for the best, which is fine, and wait for the government. She'll be right. I'll be 65. I'll be on the pension. If you want to live on the pension, it's up to you. For me, it's unacceptable. I'd rather just take all the risks, spend all my time educating myself to make sure it doesn't happen. Remember, there's 4 types of property investors. Number 1 is the analytical compulsive information gatherer. A lot of my clients are engineering clients that have never bought property. I reckon I've spoken to, over the last 10 years, and I'm not even exaggerating here, I think I've spoken to 250 engineering people, and not one of them has bought property from me in 10 years' time. And the best townhouses that I've sourced from 10 years ago have doubled and some nearly tripled. And the tax, because it's all brand new, you're saving 20, 30, 40 grand a year in tax. I have no engineering clients as my clients currently active. It's crazy. They just get educated. They're very smart. They're super smart. They're probably the most intelligent, apart from the medical sector. They're the smartest people that I have. They just keep collecting data, over-analyzing to the point of paralysis, and end up doing nothing at the end, which is, I don't know, it's a bit crazy, but doesn't impact anything that I'm doing. I'm already rich, so doesn't impact anything that I'm doing. I'm just a conduit between investments and clients. There's the get rich quick gambler, which are people that always look for cash flow positive. Oh, Konrad, your property's only going to give you 4.5% rental yield. I want 12, 15. I want to be rich tomorrow. Well, I can't help you. I invest in growth assets that are quality. I'm not here to, make you rich in 12 months or less. It's impossible with real estate investing as I know it. I don't do any cash flow positive properties or mining towns or holiday lets or any of those gimmicks. Every time I see those people that do that, they end up broke at the end. There's a comfort investor. No, Konrad, I only want to invest within my suburb. Well, if your suburb is good, I'll source there, but if it's not, I won't. I have a lot of clients like that where they ring me and say, "Oh, I live in Cheltenham, or I live in Dandenong. Do you have anything in Dandenong?" No, I don't have anything in Dandenong. I don't want to even go to Dandenong. Why would you invest in Dandenong? You can live there. There's no growth there. You want to live in Dandenong, invest in blue chip high growth areas based on past performance. So comfort zone investors, unless they live in Port Melbourne or a good area, they're going to fail long term. The geographic location has nothing to do with performance. Doesn't matter how many times you drive around the property with your car. You can't impact the property's ability to go up in value, or you can't impact the rental. And then there's the savvy active investor. These are people that have educated themselves. They use a system. They have a group of experts around them that are smarter than them and more successful, and they leverage off their experience and they invest. They trust the system, and it's been amazing. I've seen clients in the last 10 years buy 7, 8, 9, 10 properties. I haven't had anyone yet get to 10, but they're getting close. There's a few at 7 and 8. They're going to be in my book. Their lives have changed. The equity they've made has been crazy. Most of them are close to paying off their mortgage. So I can't wait for the first one to smash their mortgage. They're very close. So I'm documenting all those clients, and they're going to be in my book. There's going to be 30 chapters, 30 case studies. So if you want to work with me, definitely get all the education and then come and see me. We can help you. So if you're interested in learning more, guys, a couple of things I want to just let you know. I'm doing my last event for the year in my Melbourne office in St Kilda, which is coming up. So if you want to learn how to become an expert on property investing, how to understand property cycles state by state, exactly how to hone in with laser-like precision on Melbourne's hotspots, or best suburbs to invest in, how to structure your property portfolio correctly, how to pay off your house in record time, and how to protect your assets, making sure you never lose anything, then definitely book yourself in and attend the Real Estate Investing Fast Track Weekend. We don't record these events, they're live. They're very boutiquey. There's only 55 seats in the actual room. So you get a chance to ask questions, interact with like-minded investors. They do book out very quickly. The tickets are $47, includes lunch and catering for 2 days, and a copy of my book, which is Australian Real Estate Investing Made Simple, which is kind of like a manual for the whole event. So it's an amazing event. I'm doing one more this year. I've been pretty lazy. I've been taking a lot of holidays this year. So as the older I get, the lazier I'm getting, because I don't need the money. I just do this because I love doing this. But I'll be doing less and less live events in the future, because all my time now is taken up with my 280 active clients that I'm working with, and about 120 of those are mentoring clients, and the rest are not. So my goal was always just to work with 400 or 500 people and help them build portfolios, and then that's it. I'm not interested in growing my company and scaling up and having 100 staff. That was never the idea. It was always to become a high-level consultant. So I'm just telling you now, because I used to run 10 events per year. Now I don't do 10 events. I'll probably do 4 or 5, and eventually I'll be doing 1 or 2 per year, and that's it. So by all means, for those who are interested in becoming experts on property investing, book yourself in. For those who can't make it, you can watch a recording of one from a few years ago. Just scroll down below. You can access it immediately, free of charge, no strings attached. It's yours as a gift from me to you, just because you stayed on this channel and watched my video. It's very easy to navigate through. You just put your email and first name and email, and that's it. There's nothing to buy. There's no upsell, nothing to sign up for, guys. It's literally free. It's a free lunch, no strings attached. No one's going to call you. I have no call center. Okay, there's no one's. We don't even. You just watch it. 15 hours of content, 433-page manual. By watching this information, you elevate yourself to a top 1% of all investors in Australia, just by understanding all the stuff that we teach. And also, for those of you who resonate with what I teach, and if you want me to help you build a large property portfolio, focusing predominantly on brand new properties in Melbourne in the best suburbs, then by all means, book yourself in and we can do a 60-minute strategy session. Basically, what I do, I sit down with you, I work out where you are, work out what you want to do and accomplish. A lot of clients have different goals. Some want to replace their income. Some are looking for capital growth long-term. Some clients have massive tax bills, and they want to reduce their tax. So we take an idea and we develop a plan and we put the plan into action. It's literally, you walk away from this strategy with a written plan. You know exactly what to do, who to go to, which properties to target. It is very specific. And remember, if you fail to plan, you plan to fail. You can't just have a psychology anymore, guys. Oh, she'll be right. I'll just work my job 9 to 5, and 65, I'll retire on a nice pension. The government will look after me. Guys, not a good idea. You got to take action. You got to be self-sustained. Don't think the government will be there to support you when you retire. And you want to be in control. You don't want to be relying on the government check when you retire. You want to have money to burn. You want to be traveling, enjoying life. You've earned it. You've worked your ass off your whole life. You want to be in Europe and America and Asia, whatever your thing is. If you fail, and this is what people do, they waste so much time to get from A to B. These courses that I run, the education, the consulting that I do is designed to fast track you from A to B, so you're not wasting time. And remember, you can't afford to waste time. You can always get more money, guys. You can't get more time. Time is a finite resource that keeps running out. And once it's gone forever. You can't get it back. And people usually leave it too late. The saddest thing I see my workshops is when I have a 75-year-old come up to me and say, Konrad, I wish I knew about you when I was younger. My God, I could have done so many things. I never invested. I always left it till later when my kids were independent. And now I can't even borrow money anymore. The ship has sailed. And I wish I knew this stuff years ago. I could have paid off my house. I could have bought the one next door. I could have bought the hotel around the corner. You know, all those stories. And it's sad for me to see that because we can't help them because at a certain age, you can't borrow money. And now they're retired, they got all the time in the world, they go to these events, but unfortunately they can't take advantage of the information because the ship has sailed. So you want to get into this when you're super busy. Just take the weekend off, go there or watch the online video course, because that's when it's going to be the best for you to get this information. 1 hour strategy, you have an understanding of exactly what to do. So if you're even weighing up whether you should do buy and hold blue chip, buy and sell, options, strata, renovate and sell, subdivisions, come and see me and I'll talk about buy and hold. At least you can then know exactly what's involved and you know whether it's relevant for you or not. You walk away with my whole team of experts in Melbourne. So my access to my mortgage brokers, accountants, property solicitors, conveyancers, insurance brokers, property management, financial planners, building inspectors. I'll give you my whole team, including their contact details. So if you ever get stuck, you need a good lawyer or you need to get a depreciation schedule, I'll give you the best ones to go to. So at least you walk away with that. Just that in itself is worth having the consultation. This is an example of a team I use in Melbourne, and they actually spoke at one of my before they boot camps that we held a couple of years ago in Melbourne. So you walk away with a real strategy, step-by-step blueprint on how to build, leverage and structure a property portfolio from scratch. In order to qualify, you need to have at least a borrowing capacity of 700,000. I don't source anything under 700, like 695 is like the cheapest property. The average one is 1 million, 1.2. So if you get a pre-approval, fine, no problem. Or at least if you're a single person, you need to be about minimum 95 grand per year with 112,000 in savings or accessible equity. If you're a couple, you need to be on a 140 plus 112,000 equity. If you do qualify, if you want to come and see me, drop me an email. Just send me an email to conrad@investorsprime.com.au. You don't need to do an essay. Just say, I want to book in a strategy session, and just your mobile number and email, and I'll just contact you and we can have a chat on Zoom. No strings attached. You can have a coffee with me. Thank you very much, guys. I hope you enjoyed the video. Stay tuned for future videos. Subscribe to my channel. This is Konrad Bobilak. I'll see you on the inside.